What a week we had this week in markets. And next week, we have 5 central banks that are meeting. I know most traders are looking at 4 central banks, but we even have the South African Reserve Bank who's making a decision on interest rates. Hi guys, my name is Blake Morrow and I'm from Forex Analytics, and you're listening to the week ahead video for March 16, 2025. It's going to be like I said, it's going to be a huge week in the markets. We have the Fed, we have the Bank of Japan, we have the the Bank of England and the Swiss National Bank and the South African Reserve Bank, as I mentioned just moments ago. And we're finally seeing a bit of a recovery on a Friday in the equity markets, but can it really last? I think bounces are going to be quite shallow. And I'm going to be joined this week by Nick from Trading Analytix. He's going to talk about some of the statistics of when you see such a sell-off, what the rest of the year is going to look like for some of the other big indices. So make sure you all stick around for that. And like I said, I'm going to get right into it, and I'm going to get right into the markets where we're going. And actually, before I do, let me just mention this. If you want to know how to take advantage of this type of volatility, check out the Trader Funding Program. You can actually get into instant funding. That means you can actually say, I just don't have as much money and capital to trade with as I'd like, and go into the immediate live trading accounts. You can access up to $100,000 account sizes that way. If you want a little bit more inexpensive route, you can take a one-step assessment, which is the choice of a lot of traders that just want to access up to $1 million in trading. So check out the Trader Funding Program and see which way is right for you. Like I said, this is the type of market where you want to take advantage of having larger accounts to trade because we're seeing so much volatility. So check it out, Trader Funding Program. You can access it right on forexanalytics.com. And one of the great things about being part of the Trader Funding Program is you will have access to Forex Analytics, our chat rooms, our community. You'll have access to me for a certain period of time. I'll talk more about that a little bit later, but let's get into what's happening this next week. Now, you can follow along right here in the calendar application. It is Friday. I'm filming on a Friday afternoon, but you can follow along right here next to on the right-hand side of Forex Analytics and check out all the different events that are happening as well. And that's right next to the Live Squawk feed that you get here with all the major headlines that are hitting the markets and moving the markets right now. So we're going to start off with this next week. And this next week, Sunday evening, there's some industrial production, retail sales numbers out of China, which obviously the market's going to be looking at because China's been on a rip-roaring rally as of late. But when you kick off the week, we have U.S. retail sales. And I'm going to start off with taking a look at the dollar. Don't worry, we're going to come back to the euro. I know a lot of you are anxious to hear about the euro. The dollar index actually slid to the 618 retracement. You can see how we've pulled back quite aggressively, and we're just consolidating near the 618 retracement. Now, it's not just retail sales that we're going to be looking at. We obviously have the Fed this next week, and the Fed could potentially be the market mover because, with inflation expectations as hot as they are, and but the economy slowing, there's a lot of potential for volatility this week, especially in the dollar index. But notice how we're consolidating below the 618 retracement. What scares me the most about price action in the dollar is that we are consolidating losses. It's not like we're getting some rip-roaring rally going the other direction. It's not like we're seeing this massive bounce and buyers are coming in out of nowhere just to buy dollars. No, it's a very, very shallow consolidation of the recent losses. Now, remember, I'm on a daily chart, so you can really see this entire week's worth of price action. Very, very tight. Now, one of the things I do want to talk about the dollar index itself is look at this horizontal support. Coming into this next week, this is going to be really important because if we crack 103.25, it could be quite bearish. We've already probed it earlier this week, and now we're just kind of holding around here. And if that level gives way, that means U.S. data was weak. We had a very dovish FOMC. And, given the fact that we've worked off some of these, whoops, I didn't want to do that. We've worked off some of the oversold relative strength indicators. See how we got oversold. We're kind of working that off. it kind of frees up the market to move lower if we need to move lower from here this next week. I'm not suggesting it's going to. I think the dollar is going to continue to sell off, but we'll take a look at that euro and what I'm seeing there in just a bit. As we move along throughout the course of the week, Tuesday, we have Canadian CPI. Now, I'm going to take you over to the dollar CAD. And by the way, we have Canadian retail sales. We also have, as I said on Tuesday, we have Canadian CPI, which I think could be the bigger mover of the two. Now, we've talked about the importance of the dollar CAD consolidating around that 618 retracement. You remember from a couple weeks ago, I'm like, if you get up to 145.50 to 146, it's going to be a great shorting opportunity. It's proven that actually twice this week. You can see how we actually hit. We came really close to that 618 earlier this week, gave you another fresh opportunity. Now, what I think is happening in the dollar CAD, because I believe we have some, how should I put it? Canadian tariff, probably, everybody's kind of wearing a little thin on what's happening with Canada, but you can see, no, not with just Canada, but we have a new Prime Minister, Mark Carney, who's coming in for, I'm assuming the next couple of months, and at least, and therefore maybe we might get some resolution with tariffs, but all in all, I think that consolidation is going to give way. I don't think it's going to give away this week necessarily, but that means the 145 level is probably good resistance. Support is going to be down here around 140, 142.50, 142.60. Those are the levels I'd be looking at with the dollar CAD. Now, Tuesday night, which is Wednesday morning, which is going to be a big event, is going to be the BOJ. Now, what we've noticed about the dollar CAD, you remember dollar yen, talked about this a couple weeks ago about retesting that 151 level. Well, that happened perfectly, just as we had mentioned a couple weeks back. You can see we haven't talked about the dollar yen in a couple of weeks, but notice that we're still following this descending channel. So that descending channel that you see here is still very, very important to the market. And I believe it is going to dominate. That means if we make a move back up towards this resistance around the 149.50 level, that could actually end up being a bullish breakout. Especially if we start getting above 150. I think this is going to end up being a nice bullish breakout. However, based on the data that we've gotten from Japan, and we've seen the moves in pay, with the different unions, it seems like inflationary pressures are existing and they're becoming more prominent in Japan. So there's a chance, even though the BOJ is not expected to move on rates, so there's a chance they're going to be more hawkish than expected. And if that is the case, we could actually see a move lower in the dollar yen, which I believe the yen is going to be strengthening a little bit further. Now, if you look from this low right over here back in September of last year to the highs, okay, the Fibonacci retracement that we're sitting on right now is the 618 retracement. So if we do break back down to the downside, in other words, we break through 147 in the dollar yen, it could be very bearish for the dollar yen or very bullish for the yen. And I'm going to talk about that in one of my top 3 trade setups for this next week. So make sure you all stick around for that. So that's the BOJ Tuesday night. Wednesday, we have the Fed. The Fed is expected. Now, this is interesting. They're expected to keep rates unchanged. Market is pricing another quarter point cut or so for the year. But where's the Fed going to land? It's really a tough decision at this point in time for the Fed. They're going to probably keep rates unchanged, but whether they tilt more hawkishly or dovish, depending on, do they view the economy so weak where they might have to cut rates, or inflationary pressures strong enough where they might have to lift rates once again? That's where the Fed's at, and I think it's going to be very important going into this next week when we talk about the Fed on Wednesday. It could be a big dollar mover of the dollar, and we already took a look at the dollar index. Now, Wednesday night, we do have New Zealand GDP, we have Australian employment, and we have Chinese 1-year and 5-year rates, and in China and the PBOC might make a decision on those rates and move them around a little bit. What's Really interesting, I think, about like, especially if you're talking about the Aussie and the Kiwi as well. Both of them have been contained. Even though we've seen dollar weakness, it has not translated into dollar weakness across the board. We've seen dollar weakness in the euro, we've seen dollar weakness in sterling, but not so much in the Aussie or the Kiwi. A lot of that has to do with risk appetite. And we've seen stocks pretty weak, obviously, over the course of the last couple of weeks. We've seen a 10 to 15% decline, depending on what indice you're looking at or what index you're looking at. And I think this has contained the Aussie and the Kiwi as well. But there are signs that risk could bounce, not only from Friday's price action in the stock market, but if you take a look at crypto, which I'm going to talk about a little bit later, so make sure you stick around for that, that could help the Aussie lift back up towards that 64 cent level. And if you take a look at the Kiwi, obviously the Kiwi continues to face massive resistance around these levels. Oops, I didn't want to do that. Let me get rid of that. Let me grab this. You can see resistance continues to be, really strong around this 57.75 level. And obviously, if you're in the Forex analytics community, one of the things that we go through every single day, is we talk about important support and resistance levels. This bias chart is developed each and every day by myself, me, and our traders in our community. And what you're going to notice again is this 57.75 is very important. We've been looking at it every single day, and if that's broken, it could reveal some upside for the Kiwi. Remember, we got New Zealand GDP on Wednesday night or Thursday morning in New Zealand. Now on Thursday, we have a couple central banks. We have the Swiss National Bank, and we also have the Bank of England. We also have the UK jobs data Thursday morning. Now, even though the Bank of England is expected to keep rates unchanged, the Bank of England could come out and be a little bit more dovish. And I think that's what has the market a little concerned, especially when you're talking about the sterling, which is stalled around the 618 retracement. You remember last week we talked about it potentially pulling back to the channel support. I don't think that's changed. I think we can look at this level, and if we see some sterling weakness, we might actually see a pullback towards the 200 DMA or channel support. Now, as far as the Swissy goes, all right, and I don't want to focus so much on the dollar Swiss as I want to focus more on the Euro Swiss, which was one of our setups from this last week. You can see the Euro Swiss has launched back to the upside. The Swiss franc could indeed continue to stay weak. So notice how we have the 618 retracement and we're holding. So as long as these levels hold, let me just show you right here, this support and then this low from this week, I think the risk of the dollar Swiss is we continue to move higher. Now, what you're hearing from me is the dollar may react differently based on different currencies that it's matched up against. That's why I don't believe this is a full dollar move. I believe you have to look at cross rates. That's why the Euro Swiss has been hot on my radar. If you were here last week, you knew that was one of the setups from, this last week that we wanted to, that we will talk about here in about 15 minutes or so. So obviously the Swiss National Bank, they probably want to continue to keep their currency relatively weak. The Euro Swiss is in breakout territory. I think your opportunity is going to be best in some of those cross rates, if you will. On Friday, like I mentioned, we have the Canadian retail sales. I don't have to go back through the CAD, but that's like the major economic data that's happening this week. Oh, I forgot to mention on Thursday, we do have the South African Central Bank. I haven't looked at the US dollar South African rand a lot as of late, but what we'll do, let me just delete a couple of things. Let me get rid of just a few items here that I think need to be fixed. If you take a look at the dollar South African rand, what you'll notice, we're at the 50% retracement. We're also at that 200 DMA, a lot of support. So if South Africa is a little bit more hawkish, maybe that might in turn give us some US dollar South African rand weakness as well. Okay, now I'm going to bring in Nick from Trading Analytix. Like I said, he's going to be talking about the S&P. He's going to be talking about some of the other indices that are moving and some statistics and some individual stocks. So make sure you all stick around for that. I'll see you back here in just a few minutes. Enjoy your time with Nick from Trading Analytix.
Hello everybody, this is Nick Groves. Blake, thank you so much for passing on over to me. I'm going to talk a little bit about equities and what a week we've seen in both equities and the dollar. But let's just go ahead and talk a little bit about where the S&P has gone. So we've seen from a weekly standpoint, the S&P has come down to the 50% retracement. We've also seen the NASDAQ come on down to its 618 retracement. In the Dow, it's also been pulling back. From the April lows, it's trying to hold a 50, but came near the 618. We've seen quite a lot of selling, and the breakdown from these levels is concerning. One of the reasons why it is so concerning, and I'd like to show you guys this stat about the NASDAQ 100 drawing down after crossing the 200-day moving average. If you draw down over 6% in 2 weeks, you enter into a very bearish stat that infers that we should have a negative year. You can see the averages are 43, 35, 20, so probably somewhere near that 30 range down on the end of the year. But will the market simply come under pressure right now? And I'm not entirely sure if that's the case. We could have some type of bounce and then an eventual sell-off maybe into the fall for 2026. I would like to point out to you guys that the second week of March lows are common the past 2 decades. You can see we do typically seem to find some support around here and then potentially rally. So while I am starting to feel more bearish on the year, I'm not sure if I'm bearish here just quite yet. You'll notice in the S&P 500 how oversold this daily RSI is. And also you might note that the volume candle that we just saw from Tuesday right ahead of CPI, a lot of people got flushed. And we know that it's hard for the market to sell into highs or lows of, in this case, the year going into big data. So a lot of retail got flushed that day, the highest flush since August. So do I think we're going to see some type of recovery like we did in August? I'm not too sure. But what I will say is there's a potential for some type of a pop. We're seeing a lot of descending channels across multiple indices. You'll see this one in the S&P that we have recently broken out of. The Dow as well. I think that's actually in my DJI contract, the cash contract. So you're seeing a break there. And then in the NASDAQ as well, we are breaking out. And you could say too that we had a little bit of a false breakdown of a potential channel. So maybe it wants to stretch up towards this 19, call it 20K level. False breakdowns can lead to breakouts. The levels on the upside that I'm looking for is really eventually trying to back test the breakdown somewhere near 20,800 to 21K, maybe even a little less than there. If we look at the fibs from the highs down towards the lows, we could be looking somewhere in between the 38.2 to maybe the 50. The 50 sounds more reasonable. So we'll go ahead and move that sell zone somewhere around there. And I do want to mention we do have OPEX next Friday. And some of the stats leading into OPEX, you'll notice the S&P 500 and the 4 quarterly option expirations. March does tend to be positive. 26 for 14. And if you get a 1% move, 19 out of the 26 times, you got a 1% move higher. So that could infer that we might get a little bit of a bounce going into OPEX, okay? We're obviously looking at the NASDAQ, but as far as the S&P goes, it's quite similar. So I'll go ahead and show you guys the retracement on that as well. We need to clear a lot further before some of these downside pressures can get eased, but somewhere near this 50% retracement, around 58.30, maybe it stops short at 5,800, but I do feel as if the market may want to back test this breakdown that it had at some point. And after then, we're going to have to talk, and you can catch us on Trading Analytix for some of that information. I wouldn't be surprised to see us potentially trade, somewhat sideways until an eventual maybe breakdown later on in the year. This is a choppy and a tough environment, most definitely, but I will say, we just pulled back 10%. And I already pointed out some of the daily RSI and how oversold we are. You'll notice that these levels are typically good levels to buy. And 10% corrections do not come around all that often. You'll notice here the average number of days that we go before a 10% correction is around 290 days. All right. And, the last 10% correction that we had, I believe, was October of 2023. So we are definitely due for a 10% pullback. But these are rare situations, and it's a rare opportunity potentially. Okay. Now let's go and talk a little bit about the Mag 7s. I'm going to talk about two of them. We're going to cover Apple and NVIDIA. So Apple was quite concerning yesterday. It was the one that broke very key support. This 220 level is very important that it let go of. And it's trying to find its footing. What I will say is that it is at a weekly 38.2. This is from the lows of January of 2023. It's stalling at the 38.2, which is the continuation fib. So if it can clear back above 220, that would be a good sign for Apple. But in the event it doesn't, and we see something like a run up to here and we stall, potentially we might be coming back down towards this 200 level, which I do think is much more solid support. Take a look at NVIDIA. NVIDIA is doing well today and also causing a bit of a false breakdown. I'm going to get rid of this trend line, which it did hold for the most part. But just to make this chart a little bit clearer, it broke down from this trend line and now it's back above it after tagging the weekly 618. So there's a little bit of optimism entering the market today. So we'll have to see how next week plays out. If you're looking for more coverage on equities, check us out on Trading Analytix, or you can check me out in the Forex Analytics community. I'm pretty active in here, so and Blake and the others as well. So thanks so much. I hope you all have a great weekend, and we'll chat soon. Cheers.
All right. I hope you guys enjoyed your time with Nick from Trading Analytix. And he covered a lot of different indices, some individual stocks, and I think they're important to be watching. Next week, he might not be with us, so I might cover some of that with you. But for right now, I want to talk about the S&P and give you my view of the S&P as well. Because, after having a sell-off, and we talked about this last week, and it was one of our setups, we were looking for a 618 retracement, or 161% extension, which we hit. But you know what else we hit? And I'm going to just go out longer term. If you take this low right here, right? You take this low right here to this high, the all-time high, you'll notice we also stopped on a 24% retracement. So remember last week how I said we'd have some two-way price action down at 55.30? Well, we went as low as 55.04, and yes, we've gotten a pretty massive bounce. We've gotten over 100 S&P point bounce already, and it came from a confluence of a 24% retracement and 161% extension. So is that a mystery why we got a bounce from there? No, but we did, and hopefully you guys got to play that as well. Now, what I am more concerned about with the S&P is once we get up into this area, right around the 5,700 level, how the stock market reacts. Like I said, we've had a pretty severe sell-off. Now, because we've had such a severe sell-off, there is naturally going to be sellers on rallies. And if we can't muster much of a move above 5,700, the risk remains that we work off oversold conditions that you see right here in RSI. That's exactly what we're doing today. We work off oversold conditions, which allows us another resumption of downward trend, which may in turn relate to a down move in equities on very shallow retracements. Now, if you're a stock market bull, hopefully we don't see that. Hopefully we can get back above 5,700. But if we can't, you guys now know what to expect on that. A couple other markets I want to talk about is I want to talk about gold. We discussed last week about the potential of getting to 3,000 or channel resistance in gold. And today's high was 3,004. So we hit it. We made it. Now the question is that RSI diverged. We talked about this last week. If we hit a new high, relative strength would be divergent. It still is. So now, in my opinion, it argues more downside in the gold market. Now, am I a gold bear? No, I'm not. But if you're bullish, is this time to maybe book some profits, maybe move up your stops to break even, protect some of your profits? Absolutely. I think that's the time. That's the action you want to be taking in gold around current levels. I still believe gold is in a very bullish trend, but that doesn't mean that we're going to go up each and every week or each and every day. We're probably in store for a little bit of a pullback in the gold market at this point in time. I also want to talk about crude oil. Last week we talked about crude being at risk, and guess what? Not a lot's changed out of crude. Actually, what's happened in crude oil is we've stayed and we are just consolidating around these levels. And remember, a break below 65 bucks would be extremely bearish in the crude oil market. Nothing's changed this week, just a bearish consolidation at lows. And that is a risk if you are a crude oil bull. I also want to talk a little bit about the bond market and what's happening in notes. And it continues to be a nice consolidation in the 10-year. You can see with 10-year yields, we've seen a bit of back and forth, and I think we're developing a head and shoulder pattern in yields. That means if this does take place, and let me just draw it out for you. If you take this high to this low, maybe a 50% retracement, maybe a 618 retracement will take us all the way up towards these levels around 445 to 450. That could mean that the dollar could strengthen a little bit in the event that we see yields move a little higher before they go lower again. Now, one of the other things I wanted to mention before we move on to the top three setups of last week or of this week, review the three setups from last week. Oh my gosh, it's Friday, guys. And I was in Mexico for the beginning of this week on spring break with my kids. So we're going to talk about the three trade setups that we had from last week. We were going to review those, and I'm going to give you my top three setups from last week. But before I do that, I do want to talk about Bitcoin, because Bitcoin, we talked about the big distribution and about finding some buyers as we were approaching 75,000. This week we got as low as 76,400, something like that. 76,000. It was 76,600 before bouncing. But notice we're capped by this 200 DMA. And the thing is if we can get above the 200 DMA, the risk is Bitcoin could get back towards 90 to 92,000. And what I think is happening here is we're following this descending channel. Let me draw it out for you. So there's the upper end of the channel. You guys see it? And the lower end of the channel is going to look something like this. Something like this. And I believe we're following this descending channel at this point in time. So that means any rally up towards, 90, 91, 92,000 is probably going to find some sort of selling. And that's what I kind of think with Bitcoin. So with that being said, if crypto does bounce, that probably means that equities might bounce a little bit. You might see some two-way price action in some of these other markets as well. All right, this is the point of the video that I want to talk about the three setups from last week, and we're going to review those, and we're going to talk about the three top setups, trade setups of this week. So, first setup from last week: long Euro Swiss while above 95 cents. Risk off is still holding up. I don't know what I meant by that, but those are my notes from last week. So, it's just because risk off is still holding up right now. That's probably what's going to pull us back. And guess what? This week we dipped towards 95 cents and we bounced like a bat out of hell. So if you bought the dollar Swiss above 95 cents, the low of this week was 94, 91, and we bounced to brand new trend highs. So I think you were out of the money the most by 10 pips, 9 pips. And if you bought at 95 cents, you made 130 to 160 pips. Risking 10 to make 150 to 160. Trade setup number one, worked like a charm. Trade setup number two, short dollar Mexican peso on a break below 220 and then look to add below 20. Well, I traded the dollar Mex on the short side, and I was in Mexico, and I didn't even start trading the dollar Mex till yesterday and made money on the short side. So if I could make money being on vacation, then shorting after coming back from vacation late, then that means you made money as well. All right, so this trade has worked out phenomenally. So trade setup number 2 worked great. Trade setup number 3 from last week. S&P, play short, but look for two-way price action at 55.30. Well, I don't think it could have worked much better than that. The S&P continued to break down the beginning part of this week. We found buyers on the dip below 55.30. You were out of the money. Worst case scenario, you were out of the money 25 points before bouncing over 100. So risking 25 to make 100, getting two-way price action at 55.30. I think trade setup number 3 worked like a charm. So 3 trade setups from last week, all 3 worked. Not so bad for a free video. If you like these free videos and you think they're instrumental to helping you get set up for your trading week, make sure you give my team a thumbs up. Subscribe to this channel so you don't miss this exclusive content here, especially if you're watching us on YouTube. Sign up for our newsletter. If you just go over to forexanalytics.com and you go to newsletter right at the very top, sign up for your newsletter here because we have some very exciting news happening for 2025 for Forex Analytics subscribers and even traders like yourself that might not be a Forex Analytics subscriber. There's so much exciting stuff happening this year. I can't even tell you, considering the fact that I have development meetings with our developers all week long, each and every week. So lots of great stuff coming. You don't want to miss any of it. All right, so let's go to what are the top 3 trade setups for this week. The first setup is going to be shorting Bitcoin at 92 to 93,000. I believe Bitcoin has been in a very long-term distribution, which means this is a very significant top. I believe that this double top is going to play eventually all the way down to 75,000 and maybe even quite a little bit lower. So on our way down, it's not going to be one straight shot. You want to just keep selling rallies. In this case, back up towards 91 to 92,000. Or 92 to 93,000. Actually, I think it'll be more like 90 to 92,000. You want to look for a short, and hopefully we get you get that opportunity this week. All right, so that's trade setup number 1. Trade setup number 2 has more to do with the Bank of Japan and with what's happening in the euro. So trade setup number 2, and you can see this euro yen has a lot of support down here. Lots of support. But guess where we have a lot of resistance? We have a lot of resistance right here. Keeping on the, and by the way, let me just show you. I'm giving you 3 trade setups. I'm giving you 3 trade setups for this week. But if you want to know what I'm doing like all the time, you can actually just go into the chat room and say, oh, Blake closed out his positions here last night. Oh, Blake shorted the euro yen with stops above 162.50, filled at 162.08, and then I got out of my euro yen. Whoops, I got out of my euro yen down here. I closed my euro yen for 66 pips at 161.42 earlier today. That was today. I got out of it right here. Now, what I'm looking for this next week is I'm looking for a move like this to sell into the euro yen as long as we stay below this trend line. Okay, so I want to short it against that trend line, the euro yen. Like I said, the euro, there's a lot of two-way price action around here, and I believe the yen's going to continue to strengthen. Now, guys, I give you 3 trade setups for the week. But if you want to know all the trades that I'm doing, you can just go right over here to the trades room, and I have a running blotter of what I've got open, positions I'm in, when I close out of them, when I take losses, which, they're not all gains, of course. I happen to be in a couple of positions right now. And if you want to know what they are, all you have to do is come to the trades room. You can see what I'm doing. You can see what other traders are doing as well. All right, so last trade setup, because I gave you my second. Third trade setup is I want to short the dollar Mexican peso on any rally now. So I want to short it from anywhere from 20 to 20 to 20.04. So any move like this, I'm looking to initiate a fresh short position in the dollar Mexican peso. You're probably going to hear me say that a few times this year, because if you've been watching any of my videos for the last, I don't know, several months, as you know, the Trump administration was going to, Trump was going to take his second term as president. I believe that Mexico and the U.S.-Mexican relations are going to be better than probably most, as there's multiple things that Mexico is going to be working with the U.S. on, and I believe the Mexican peso is going to be the big beneficiary of that. So I will continue to be buying Mexican pesos on dips. So in other words, when the dollar Mexican peso rallies, that means the Mexican peso is taking a dip. I want to use that as an opportunity to sell into. So I'm going to short the dollar Mexican peso somewhere between 20 to 20.04. So those are my three trade setups for this week. And once again, if you found this video is beneficial, make sure you give it a thumbs up. Jump down in the comments down below. Maybe there's something that I might have missed, or maybe there's a trade that you're thinking of. Jump down there and have a conversation with me. Guys and gals, my name is Blake Morrow. I hope you enjoyed this week ahead video, and I want to thank you so much for spending your time with me. I know it's your most valuable asset, so thank you so much. I will catch you on the Monday morning F.A.C.E show. Those are our free shows. I'll catch you there. See you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.